holidays, and welcome back to our weekly market insight series brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. I've got a lot of news for you today, so let's get right to it. Markets were looking to recover after the sell-off that followed the Federal Reserve's rate decision. Stocks rebounded after suffering losses on Wednesday. Meanwhile, the 10-year Treasury yield spiked above 4.5%, its highest level in 7 months. On Wednesday, the Federal Reserve cut interest rates for a third consecutive time. The FOMC committee voted 11-1 to slash the benchmark rate by a quarter point, bringing the target range from 4.25% to 4.5%. The central bank also revised its outlook for rate cuts in 2025, indicating that it now foresees 2 reductions during the year. In his press conference following the announcement, Fed Chair Jerome Powell indicated that the future easing would require further progress in cooling inflation. Economists were expecting 3 interest rate deductions for 2025 before the announcement. The American economy grew at a healthy 3.1% annual clip in the third quarter, boosted by consumer spending and expansion of exports. The growth is higher than the previous projection of 2.8%. The figures are also higher than the 3% from the second quarter. Consumer spending moved up to 3.7% pace, its fastest since early 2023. Exports grew by 9.6% in the quarter, up from 7.5% in the prior estimates. Consumers stepped up their spending last month, boosting retail sales. The Commerce Department indicated that retail sales rose by 0.7% from October, beating the expectations of 0.5% gains. The spike in sales can be attributed to a surge in car purchases and online shopping. Auto sales jumped by 2.6%, while online sales rose 1.8% as Black Friday and Cyber Monday promotions generated massive sales. The National Association of Home Builders reported that the December housing market index was unchanged at 46 from November. It was the first time in 3 months that the sentiment did not climb. Builders expressed concerns with high interest rates, elevated construction costs, and a lack of buildable lots. However, they did express renewed hope about a better regulatory business climate in 2025. Existing home sales in the U.S. ascended 4.8% in November to an annualized rate of 4.1 million. It was the first time that sales topped the 4 million level in the last 6 months. Sales accelerated by 6.1% from 1 year ago, the largest year-over-year gain since June 2021. The median existing home sales price rose 4.7% from November 2023 to $406,100,000, the 17th consecutive month of year-over-year price increases. New home construction in the U.S. fell to a 4-month low last month. Housing starts decreased by 1.8% to an annualized rate of 1.3 million during the month. The reading followed the 3.2% decrease recorded in October. In contrast, building permits rebounded to their strongest pace since February and increased by 6.1% after falling by 0.4% in October. Climbing mortgage rates led MBA mortgage applications to decrease by 0.7% during the week ending December 13th. This was the first drop in applications since the week of November 1st. Refinancing contracts slid 3% from the previous week, but were up 41% annually. Purchase applications decreased by 2% week to week, but were 6% higher when compared to the same week in 2023. The average contract interest rate for 30-year fixed mortgages rose to a 6.75% from a 6.67% during the span. The Department of Labor reported that claims for unemployment benefits decreased by 22,000 to 220,000 for the week ending December 14th. Initial jobless claims spiked the previous week, continuing a streak of volatility associated with the holiday season. Continuing jobless claims decreased 5,000 to 1.87 million for the week ending December 7th. On Thursday, 2 other central banks made their last policy decision of the year. In Europe, the Bank of England decided on a 6-3 vote to leave interest rates unchanged, keeping the benchmark rate in the 5.25% to 4.75% range. Analysts were expecting the decision after November's inflation figures were the highest in 8 months. In Asia, the Bank of Japan also held their benchmark rate steady. The BOJ said in its statement that the decision to hold the interest rate at a 0.25% was a split 8-1 decision. And that's it for this week. If you like this video, please hit that like button. And to be notified every time we upload a new video, please subscribe and never miss out on breaking news. My hope is to always keep you updated with the latest world news and our pricing incentives. Happy holidays, everybody! That's right. Buffy out.